Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 539th edition of this show. Traders, this is being filmed on January 26th for Trading Wednesday, January 27th. What we will talk about are three things in this video. Well, probably more, but three things I have on the board here. One, FOMC, Federal Open Market Committee, or Fed Day, is Wednesday. That's when the U.S. Fed, comes out and makes an announcement whether they will raise lower or leave rates unchanged. Traders, I expect them wholly to leave rates unchanged, but the announcement that is made, the statement that comes with it, will certainly make these markets start to go. In the chart segment that I'm about to show you in a couple of moments, you will see that out of the blue, bonds rallied to the OTAPMA, or the Omni Trading Academy's proprietary moving average, rallied up to it. The S&P pulled down to it. At the same time, at least 25 other currencies did the same thing. I think you are going to find this chart segment very interesting. Traders, OTAPMA, the Omni Trading Academy's proprietary moving average, as I showed you in the last video, the world's indices and the U.S. indices have all come racing down towards that average within a week's time. The last time we tested this average was March of 2009. Huge trading turn and the markets exploded. Well, we finally come back down to that average, which I will show you on a bunch of charts in just a moment. And you will see that this is absolutely what I call a do or die area. We are at a juncture in the markets right now where we are either going to continue a rally or a big bear leg is going to start to break us down. And again, the last time I came to you with one of these indecisive weeks was back in March. And boy, oh boy, was that a big trading turn. Now, about 10, 12, 15 days ago, we talked about the Omni flip-flopping. It doesn't do that for no reason. Then, boom, everything breaks down. The dollar starts to rally. The currencies start to break, at least Euro currency, British pound, and some others, right? Wow, out of nowhere, these markets start changing direction. A lot of it seems like the Omni average, we've been a magnet for these markets. So the point I'm trying to make is right now at this juncture, when the market makes its decision, we probably will have a trend month or two afterwards. We'll have a nice trending pattern in the indices to play with. Now, I'm going to show you some charts in the indices. I'm going to show you some charts in the currencies. I'm going to show you a bunch of stuff here, and I think this will paint the picture for you. Why, basically, you almost have to stand aside and let the Fed make their announcement. Of course, we don't trade on Fed days anyway. If you are a trader who trades Fed days, tomorrow is a day you literally have to stand aside and let the Fed make their announcement, let the market go like this, and then on Thursday, you come in and you attack. That's the way you should handle this, and you will see why we are at a very important juncture in our marketplace. Traders, we're also going to talk about the dollar index and the fact that it's probably going to continue to rally this year. Now, many of you are going to be afraid if the dollar rallies, it's going to knock the stocks down, and I'm here to tell you, no way. If this is a real correction or a real bull market, of course, the last few days you wouldn't think so, but the whole thing since March till now. If it is a bull market, at some point the Fed will raise rates, it'll make the dollar go up, and stocks will still be appetizing, and they will go up with the dollar. It will take the Fed to signal that they're either going to raise rates or to actually raise those rates. Then dollars go up while S&P goes up and bonds go down. That is the picture I expect to happen over the next few months. However, we are at a serious juncture with the OTAPMA, and if we break the Omni Trading Academy's average and start to trade lower, all bets are off on any upside for a while. So I am quite worried at this point. I still am a firm believer that we will hold the Omni average and explode over the next couple of weeks, but I will trade what I see, not what I hope for. Now, traders, just to keep you focused on the OTAPMA, or the Omni Trading Academy's proprietary moving average, it's not magic, but for whatever reason, British pound, Australian dollar, Japanese yen, Canadian dollar, gold, silver, ES&P, or the Emini, NASDAQ, the Russell, the Dow Jones Industrial Average, the Transportation Average, the FTSE, the DAX, the Nikkei, the crude, the natural gas, the heating oil, the gasoline, cotton, cocoa, coffee, They have all come right to the Omni Trading Academy's average, as well as indices across the world. I am telling you that this does not happen for no reason. I watch these markets every day. I've been watching them every day for 28 years. This is a rare occasion. It means big, big change coming. Let's see what that change is going to be. Again, much of it hinges upon the Omni average. If we hold it in the indices, away we will go. You will also see that gold is in this picture too, as far as the Omni average is concerned, and I have a gold chart for you. So with no further ado, traders, let's go take a look at these charts. Okay, traders, bunch of charts to show you here. The first chart you are looking at is the Emini S&P daily bar chart. This proprietary moving average. You can't see it on here, but the last time we touched it was back in March, and it just kissed and got above and has been rallying ever since. The closest we got to the OTAPMA was here back in November, and then we popped again. Well, this week we came racing down. 3 big days. Boom, boom, boom. Last week into this week, hit the average, bounced, pierced it a little bit today, and settled at it, S&P. That is an important juncture in the market. I kid you not, traders. You will see after a few charts here. If we fail to hold this average and stay under for a couple of days, big down leg comes our way. However, I expect it is going to hold like it held, and continue on. But I don't know that for sure, and you don't know that for sure. And there's no way of knowing that unless you gamble. So what we are going to do is see what the Fed says, see where we settle on Wednesday. And Wednesday night into Thursday, we make our play. But watch these next few charts, traders. You will see what I'm talking about here. Okay, traders, the next chart is Dow Industrials daily bar chart. And once again, smashed down, hits the Omni proprietary moving average, pierces it for a day, gets right back above it, and settles very much right on it on Wednesday. Again, last time we touched it, way back in March of 09. Ever since, it's held up and held in this beautiful channel. Well, through the channel, testing the average. I'm slightly worried here, traders. You know I'm a bull at heart, but I am worried. We don't hold this average. We have a problem here. You will see this in many more charts. Let's look at others. Okay, traders, NASDAQ daily bar chart. Beautiful channel, broke down through the channel, but didn't get too far under it yet. NASDAQ is now below the parallel channel and testing the OTAPMA, or the Omni Trading Academy's proprietary moving average. It is there. It bounced off of it, went back up to that trend line last night, broke back down again today. This is all Wednesday's action or Tuesday's action. So I'll tell you, it's testing. The average is starting to move this way. It's getting a little bit scary here, traders. I really hope, like here, we hold, and like back there in March, we hold. I'm hoping this is a hold, and away we go. But you did have a flat top. It broke down from the flat top. It's testing an average. It hasn't tested in almost a year. Keep your eyes peeled. Stand aside tomorrow. Let the Fed make their announcement. Let the market do what it's going to do. Attack it on Thursday. More charts, traders. Let's keep going. Slightly encouraging, one of the 3 leaders, the Russell. This is the Russell daily bar chart for the March contract. Did not even test the average yet. Yes, it had a flat top, and yes, it broke down, but that's what happens after flat tops. Did not pierce the average, did not even test the average. So slightly encouraging there in the Russell. Let's keep going, traders. Traders, Dow Jones Transportation Average, the leader, the big kahuna of the U.S. indices. This trend line that you can see right here goes all the way back to March of 09. Connects to dip in November. Here it is today, right? The Omni Trading Academy's proprietary moving average is here. Back in March, you can't see it on the chart, but back in March we got above that average when we started to get above that trend line. And we've stayed above ever since. Had a little test of it in November and stayed above. But this time, a little bit of a rounded top there. Smashes down, comes right to the Omni average and bounces off of it for 2 days in a row. We hold, higher we go. We break it, we take out support, and we have a problem. Very important juncture in this market, traders. This average is no joke. It will help you figure out whether we are moving up or down over the long term. And I really hope it holds here. But the fact that it is starting to do this, that average, is worrying me. Again, traders, I'm a bull at heart, but I trade what I see. I wanted to show you these charts so that you recognize that many, many markets have raced towards this Omni average. And there will be some sort of a trend once we either stay above it or get below it. keep your eyes peeled. Let's go, traders, because there's more. Okay, traders, next up is the FTSE March Daily Bar Chart, one of the world's leaders in indices. Comes down to the Omni average. 2 days ago, pierces it. Yesterday gets above it. This morning gets back below it, but does settle above it. Just bouncing back and forth around this Omni average. That is a difficult area for trading. I kid you not, until it makes a decision here, you don't know if you should be a buyer or a seller, right? None of us really know. Indicators, by the way, are severely oversold now and starting to hook up in most of the indices. As we approach the Omni average, indicators start to get bullish on the indices. That I find promising, but I will only trade what happens, and I won't trade what I hope happens. Right there, though, traders, we have our line drawn in the sand, so to speak, with these indice markets and currency markets, and you'll see that shortly. Line in the sand here, so let's take a look at what's coming next. Okay, traders, the German DAX daily bar chart smashes down, pierces this average, which is not very likely. Even when it does, it bounces right back. This time, pierces it, drops tremendously afterwards, spent 3 days below the average. Any market that spends 3 days below this average, if you ask me, is a sell of rallies from that point forward. So the DAX not promising here in this picture. As you can see, some promising, some not, some above the average, some hovering at it, some slightly below it. Very, very interesting juncture that we are in at this time in the markets. German DAX traders, keep an eye peeled on that one. All right, now we are going to look at a couple of currencies. It's going to be the US dollar and the euro currency. Let's take a look. Okay, traders, this chart should look familiar to you. It is the dollar index with the big bull flag. We showed this to you in a couple of videos all during last week. Bull flag, we break out of the bull flag on this day. Market comes back and tests it for 3 days and now rallies up and settles right here. This was a bull flag. Now we're above it. Here's what's interesting. Dollar index is above the Omni average, gets above it, comes down and tests it while it creates the bull flag and then rallies out. That, to me, says dollar index is in for an extended rally towards the upside. Traders, I think that's where this is going. Keep an eye on it. Bull flag, break out of the bull flag. The bull flag was tested. Before that, breaks out above the Omni average. We haven't seen that since March of 09. Gets above the Omni average, creates a bull flag, tests the average, and rallies out. That is a bullish trend beginning. That's the dollar index. I think the dollar index spends this year, or at least much of this year, moving higher. Dollar index appears to be a buy of dips. Of course, the Fed could come out and say something insane like we're not raising rates for the next 2 years and then the dollar dies, but I don't think that's what the Fed will say. The charts usually show the fundamentals first, or fundamentals always seem to come out in the charts first. Bull flag shows up, you're above the Omni average, Fed day coming. I say this bad boy continues higher. Let's go look at euro currency. Okay, traders, opposite of the dollar index is the euro currency. The euro currency daily bar chart. And here is what I find very interesting. Dollar put in the bull flag, currency, euro currency puts in a bear flag, breaks down out of the bear flag and is on its way down. And I think we break the 140 mark. I think we start trading in the 130s for the next couple of months, maybe longer, who knows, maybe lower, who knows. But the euro currency does not look good here. Interesting, back in March of 09, euro currency gets above the Omni's proprietary moving average when the dollar index gets below it. Then suddenly, right here, mid-December, the dollar index gets above the Omni average and the euro currency gets below it and starts a trend. I think we are in a trend, and I think the trend is lower in this euro currency, higher in the dollar index. Okay, traders, next thing I want to show you is a comparison. U.S. bonds, gold, and the Emini S&P. Let's go look at these next 3 charts. Okay, traders, here is where the bonds become interesting. They race up the night before a Fed meeting and hit the Omni average, get above it, turn around, and settle below it. The night before a Fed meeting, bonds race up. Remember this, if the Fed is going to raise rates, bonds go lower. If the Fed is going to lower rates, bonds would go higher. We are at a point in the marketplace and the economy where we all know the Fed has already been thinking about raising rates. That makes bonds go lower. So right before a Fed meeting, the bonds race up to the Omni average. Here's another interesting thing. Top, top, that's a double top. Look at the drop. Well, top, top, double top. Drop should be coming. Technical reason to think there's a top coming. Hits the Omni average, gets below it, and the Fed has its meeting and makes its announcement on Wednesday, and most likely in its statement it will talk about down the road it's going to need to raise rates. That should stop the bonds in this rally and knock it back down. Here's the only other scenario in bonds you need to watch out for. Shoulder, head, shoulder. 1, 2, 3. That is a head and shoulders. This could be a possible run up to test the middle of the head. If that's the case, you're going to hit the 121 area before you finally break. I think a lot of this depends upon what the Fed says tomorrow. That's why I'm going to stand aside. Once again, bonds rally to the Omni Proprietary's moving average, get above it, fail, and break miserably the day before the Fed makes an announcement. Plus, you have a head and shoulders, and this has been a run up to test the head ever since. I think bonds running out of steam here. But more interesting is, as I said, we are going to compare bonds, gold, and Emini, right? Here's bonds, runs up to the average the day before the meeting. Let's go look at the next chart. Traders, gold, daily bar chart, April. Out of nowhere, gold races down, touches the Omni average, and begins to hold the day of a Fed meeting or the week leading into a Fed meeting, just like you've seen in the bonds. This lately, as you know, the gold has a lot of gold bugs in it. It seems to be more related to economic movement today than it was simply a year ago, and basically because there are so many gold bugs in there, so of course we will include this in our economic outlook. Gold runs down to the Omni average just the way bonds ran up to the Omni average, and it sits there the day of a Fed meeting. Probably the gold will hold, but we will see. If the dollar rallies, the gold can hold, right? The gold bugs will keep it up for a while, but it won't stay up forever. Interesting that we raced to the Omni average in gold. If you look, traders, you can basically expect that gold will hold, as it has in the past, but being that so many markets are now at the Omni average, who knows what it will do? Another reason why you need to really stand aside on Wednesday. All right, traders, so that's the gold. You saw the bonds raced up to the average. The gold broke down to the average. Let's take one more revisit of the Emini S&P. Okay, traders, you saw the bonds ran up right to this average. The gold ran down right to this average right before a Fed meeting. Emini S&P races down to the average as well and stops cold right at it. The day of a Fed meeting, I am not buying the fact that these markets are going to break. I'm thinking because of the Fed meeting, it's going to be a perfect buy opportunity. During the day tomorrow, I will not be trying to buy this. If I were to scalp it, I'd actually be selling rallies in the E-mini. But the overall picture, the larger picture is market races down to the Omni average, gold races down to the Omni average, bonds race up to the Omni average, and then there's a Fed meeting. Usually what you'd expect is bonds to turn and break, gold to turn around and rally, and the S&P to turn around and rally because gold came down to the average, S&P came down to the average, and bonds ran up to the average. So I find this very interesting, traders. Again, we are at a very interesting juncture in the marketplace. Many decisions will be made as far as direction or trend direction is concerned after this week is up. Take a look at your charts, traders. Pull your averages, pull your daily charts. Compare all of these indices to the currencies. See what you think. The picture I'm painting for you here says fake out and the markets resume trend after the Fed tomorrow. Again, I don't have a crystal ball, so I don't know that, so I will stand aside. Wherever that market goes, I will chase it as of Thursday. So, traders, you've seen those charts. You've seen the OTAPMA. Don't forget, it is a Fed day, and this is, as you've seen, a do or die area, traders. Very important juncture in the markets. Very difficult to trade right here. Very difficult to figure out direction. In fact, today, Omni went short both NASDAQ and S&P. They went up against us a little. We added to positions. They came back down. But the Omni Trading Academy's proprietary moving average was sitting right under the market. Has me a little bit nervous. I bailed out. I didn't even want to stay in the trade because we're hovering over this average, below it, above it, below it, above it. I don't know what the big direction will be next, right? So I find it difficult to be in any trade. So I ended up shaking myself out after 5 hours of sitting in a trade. And then the markets broke and came our way. I know, I don't want to hear it. I know. But hey, when the average is threatening the way it's threatening traders, come on, I've been trading this average for most of my life. I know how to handle it, and that's usually what we're doing. Try to sidestep as much as possible. Hit, run, get in, get out. Wait for the market to finally create or give direction, and then follow that direction for quite some time. So that's where we are now. We're hoping to get out of this juncture, get away from this average, and get some sort of a trend direction. I hope it's up. I'll trade whatever it is that I see. Don't forget, traders, a huge amount of markets hovering around that average right now. Very, very important. And keep in mind, this is a do or die area. We hold here, rally begins. We fail to hold here, probably trend starts to trend lower. We don't want this trend to trend lower. We want this trend to continue higher. But, again, we'll trade what we see. All right, traders. For you guys who know me well enough, you traders who know me well enough, there could be a scalp or two tomorrow, quickies in and out before the Fed makes their announcement. We'll see how that goes. I'll certainly let you know if we're going to get into or out of a market. If we do, traders, I'm going to be really nimble. I'm going to be in and I'm going to be out like that. So if you're going to come along with me, pay attention, watch the chat rooms, watch for the blue typing. I'll let you know when it's time to react. All right, traders, let me get back out there to the markets. Let's see what's going on. Don't forget, try to sidestep markets tomorrow. Let the Fed do what it's going to do. These markets will be here on Thursday. You don't have to be in them. Very dangerous trading on Fed days. No one knows for sure if it's going to go up or down. Usually it will extend itself so far it takes out all the buy stops and then breaks to the downside. Or it overextends itself to the downside, takes out all the sell stops and rallies up. You don't want to be in that. Sidestep it, all right, traders? Advice from me. We will be doing that. All right, traders, give me a call anytime day or night, 702-629-4755, and make sure you come on down to the Omni Trading Academy. It's www.livewithoscar.com. All right, traders, I'll see you in the chat rooms. Have a great day and keep your emotions out of trading. One of the best things you can do to help yourselves with this is say this to yourselves every morning, every afternoon, every evening, and you know what that is? Subs are in! Emotions are out! Futures trading is risky and can cause substantial financial loss.